And good morning, everyone. Thank you for joining us across the state. I know you're gathered at various COGs and some of you are online. We are really glad to have you today. As Ayanna mentioned, I'm Rebecca Badgett. I'm an attorney and a faculty member at the School of Government, and I focus primarily in local government finance and grants management. Before we jump into things, I want to recognize that this has been a very difficult year for you and your communities. And I want to thank you all for sticking with that and helping these communities recover. I know it's been a long journey, and there are a lot of parts and pieces to this journey that are still coming together. And today I'm looking forward to spending some time with you to explore some of the general compliance requirements that are going to govern the Community Development Block Grant Disaster Recovery Program, CDBG-DR. As you can already hear, that's a mouthful, so I won't be saying that many times today, but you might hear me say disaster recovery funds. We're going to talk today generally about the compliance requirements tied to the disaster recovery funds and what you can do once you get these funds to spend the money in a lawful way. Now, some of you have been with us for a while. This is, as Ayanna mentioned, our third training in a series of 3 trainings. I want to mention where we've been and sort of where we're going. Maybe you've been at all the trainings, maybe you haven't had the opportunity to view the previous 2 trainings. So we're going to recap some of the past training material, but really jump into more of the compliance requirements. So in July, we did a basic introduction to the CDBG-DR program, and I discussed the different eligible projects and programs that the money can be spent on. And there are different categories of projects that are available under this grant program. So that July training is available online. You can go back and view it if you need more information about the types of projects and programs that CDBG-DR is eligible for this disaster. Then in August, we did a deeper dive into some of the more basic compliance requirements that are tied to CDBG-DR. If you're familiar with the CDBG grant program generally, you're probably an old hat at some of these things. But if you're less familiar, this August training is a really good idea to go back and think about how you are going to document compliance with your national objectives, how you're going to document compliance with tie back to the disaster, what's the environmental review process and what's involved with compliance there, and also some duplication of benefits issues. I'm going to touch on each of those that we touched on in the August training today, but the August training does go into a lot more detail and gives you examples of the types of documentation you would need to support these compliance areas. So I highly recommend going back, familiarizing yourself with both our July and August trainings, and then this one sort of the icing on the cake, if you will, for compliance requirements. We have a lot to cover. There is a lot related to compliance with any federal grant award. If you're familiar with federal grants and administering federal grants, you know that. It's almost impossible to cover in a full day training, but we're going to do our best. So hang with me, and we're going to go through today the responsibilities of you as a subrecipient of the CDBG-DR money. What do you have to do once you get this money in your hands to expend it in compliance with the law? So we're going to talk about what are some of those governing laws and regulations tied to the expenditures of monies, because you can't comply with the laws unless you know what they are. And then how to really document and meet those compliance requirements. As a general review, for those of you who are less familiar with this grant program, the Community Development Block Grant Program is a federal grant program that is administered by the Department of Housing and Urban Development. So we call that HUD. HUD grants these funds to the grantee, and it's intended to provide flexible, long-term recovery funding to help communities recover from presidentially declared disasters, particularly when the other funding sources are insufficient. So you say you're using your DR monies to meet unmet recovery needs. That means we got some chunks of money for recovery needs, but the disaster recovery funds come in and backfill and meet those unmet needs, saying we still have some work to do here. We're not totally recovered, and we don't have enough funding on our own to fill those funding needs. So we're going to bring in these disaster recovery funds to use them for projects that are primarily focused on housing, infrastructure, economic revitalization, and some mitigation efforts. Those are the categories of the projects that are eligible with these CDBG-DR monies. The main goal of this grant program is to help benefit low and moderate income persons. So 70% of the funds have to be spent on initiatives, projects, programs that benefit low and moderate income persons or households or areas. And our August training really dives deep into how to meet those compliance requirements to document that a project meets a low and moderate income specific criteria. For this tranche of DR funds, the Congress appropriated funds via a disaster legislation. It's Public Law 118-158, and that's where Congress said for all the disasters in 2023 and 2024 nationwide, they authorized $12 billion in funding. Now, North Carolina didn't get all $12 billion, right? There were other states that had national disasters, but we were granted $1.4 billion in disaster recovery monies. The universal notice, it was published to sort of explain how HUD wants the grantee, the State Department of Commerce, to spend these monies, these disaster recovery monies. What are some eligible projects and programs? So the universal notice is kind of like the award terms and specific criteria for this tranche of disaster recovery monies. So if you want to go look at the specific laws for the Helene disaster, you would look at our universal notice that was issued on January 8th. There was a Federal Register announcement on January 16th that also appropriates our funding. It says we are getting $1.2 billion for unmet recovery needs and $86 million generally for mitigation needs. And Asheville got its own tranche of money, is separate from the other tranche of monies. They got $225 million just for recovery efforts themselves. There have been a couple of revisions to our universal notice when the president changed. President Trump came in and had some different memos issued. So there's some revisions to the universal notice that are outlined in memorandums. So these are the basic laws that are going to govern this tranche of CDBG-DR monies. Our $1.4 billion of CDBG money to the state is going to be administered by the North Carolina Department of Commerce. They are who we consider to be the grantee. So when I say the grantee has to do this, we're talking about the Department of Commerce. So the Department of Commerce has a big responsibility here. They have to make sure that these grant programs and these grant funds are spent for allowable activities under the award. So the Department of Commerce took some time to come up with projects that would most benefit unmet recovery needs in Western North Carolina. So there's sort of a timeline where the Department of Commerce had to come up with an action plan. Here's what we want to do with these monies after they went out and talked to many of you in the western part of the state to see what your unmet needs might be. So they developed an action plan saying, here's how we think we should spend the money. HUD approved our action plan saying, good job, go forward with these projects. Right now, the grantee is finalizing their policies and procedures around the approved projects. And then eligible applicants are going to be able to apply for funding soon for many of these programs. And then you're going to, once you get the funding, implement the compliance requirements tied to the funding. So we're sort of in the area where there's the yellow arrows, where you're about to be able to apply for funding, and then you're going to think about how to implement and comply. And the Department of Commerce is currently writing a lot of those policies and procedures for the specific programs that they're going to support. When I mention the specific programs they're going to support, there are really 5 main programs that HUD came up with to spend these CDBG monies on. They are the reconstruction and rehabilitation of owner-occupied units. That's where $807 million of these funds are going to be spent. That's a large chunk of the money. It's going to be going to helping individual property owners reconstruct, rebuild their homes. That program is for individual property owners to apply for. So local governments, cities, counties, you're not going to be directly applying for any grant funds for the reconstruction or rehabilitation of owner-occupied units. You might help oversee part of the program implementation, but you are not an eligible applicant for that specific program. The other 4 programs, however, you are an eligible applicant for. So you can get ready, start thinking about if you want to apply for funding for any of the remaining 4 programs. And these are the Workforce Housing Program. And the Workforce Housing Program is money to help rebuild housing, individual housing structures for purchase for individuals who maybe lost their housing, or you just need to increase your housing stock in the area. The goal here is to attract and retain workers in the areas. So we want to make sure we have affordable housing for teachers, for emergency workers, and other people so that they feel like they can stay in Western North Carolina. So the Workforce Housing Program is really dedicated to creating affordable workforce housing to entice people to stay in the Western North Carolina areas. The next program is the multifamily rental housing program, and that's where $191 million can be spent. There are two types of programs here. The goal is to create more affordable rental housing for disaster impacted areas. So there are smaller projects. Smaller projects are defined as multifamily housing under 7 units. And then you can have a larger multifamily rental housing project with units above 8 or more. The goal is more affordable rental housing. So workforce housing is about creating housing for ownership. Multifamily rental housing program is about creating more affordable rental housing. Then there are funds dedicated to infrastructure projects in the area. There are all types of infrastructure projects that will be allowable. Commerce is coming up with those requirements now. And then there's the Commercial District Revitalization Project. And that is about sort of revitalizing commercial districts. That doesn't necessarily mean downtown districts. Commerce is going to define exactly what it means by commercial district revitalization. So those are our project areas where you're going to be able to spend the bulk of these CDBG-DR monies. And sometimes you can layer the projects together, like you might have an infrastructure project and a commercial district revitalization project, and they can work together to create general economic revitalization in the area. If you want to know more about these programs in particular, our first training dives deep into these programs and the requirements and the funding amounts. So go back and watch the July training if you'd like to know more about each of those programs. We've talked about this a lot in our programs, but all CDBG-DR projects have to meet a few criteria, key compliance objectives. First, all projects have to be tied back to the disaster. They have to meet an unmet recovery need that addresses a direct or an indirect impact of the disaster. So it has to have some relation to Helene. Even if it's somewhat of a tangential relationship, the project has to relate to the Helene disaster because that's why you're receiving the funds for recovery. Under the CDBG program, all projects have to meet what they call a national objective. There are 3 national objectives: benefit low and moderate income persons. Again, 70% of the funds have to be spent in that category and under that national objective. The other 2 are to prevent and eliminate slums or blight. The other one is to address an urgent need. So some kind of need that was related to the disaster, probably closer to when it happened. So those are your national objectives. Our August training goes into depth about how to meet those requirements and how to document compliance. Then we have the eligible uses. All monies have to be spent on what we call an eligible use. So you can only spend the monies on the projects and programs that the grantee has designed and said in the action plan, here's how we're going to spend the money. So you have to tie back to the disaster, meet a national objective, and have the eligible use of funds. Another compliance requirement is that all the CDBG money has to be spent in what we call most impacted and distressed area, or a mid area. So the mid areas, 80% of the allocation has to be spent in the HUD identified mid areas, which are listed on this slide. So 80% of our funds are in the HUD identified mid areas, and then 20% of the funds can be spent in what we call the state identified mid areas, because the state grantee went in and assessed our unmet needs and said, hey, we have some unmet needs in certain areas that were identified by HUD, so they're going to be considered our state identified mid areas. So when you see in the grant programs, this program can only be spent perhaps in a HUD identified mid area, you can go back to this slide and make sure that you qualify into that area. Another important compliance requirement for the program is the duplication of benefits. Disaster recovery projects are often supported by multiple funding sources, including insurance payouts, FEMA, SBA loans, charitable aid, other federal funding sources, and state programs, right? You've got a bunch of variety of funding to help support your recovery. CDBG-DR is intended, as I've said before, to help meet those unmet recovery needs when other funding sources are insufficient to cover the full cost of the project. A duplication of benefits occurs when the total assistance received exceeds your total project needs. So if you have a $1 million project and it was all covered by other funds, you wouldn't need CDBG to come in and fill any of the funding sources because there is no funding gap. If you have insurance and FEMA covering $1 million of a project, there is no unmet need. HUD requires that all projects undergo a duplication of benefits analysis. They want to make sure that these monies are coming in and only filling unmet needs. So good news, the state's going to take on the requirement to conduct the duplication of benefits analysis for you. So it's going to be up to the state as the grantee to come in and make sure that no project's receiving more funding than what's needed to meet their recovery needs. They're going to assess the total need for a project, identify the total assistance available, including all the funding sources, and then they're going to calculate the unmet need and put the monies towards that amount. That'll be your amount. The unmet need will be your total award amount. So you don't have to worry about completing this analysis, but you're probably going to be asked to provide supporting documentation that shows the other types of financial assistance going towards a project to make sure that the state has everything they need to do their unmet need analysis for a particular project or program. If anyone has any questions, you're welcome to throw them in the chat as we go along. We'll probably create a document answering all the questions in giving you answers after this training. I know this is kind of a lot and quick to throw at you, so feel free to document your questions in the chat as we go along, and I will periodically peer at the chat to see if there's anything I need to catch. So in addition to your duplication of benefits analysis, another important piece of the compliance puzzle for this grant is compliance with environmental reviews. Probably heard the term environmental review quite a bit now. FEMA requires environmental reviews as well. It's what we call a cross-cutting compliance requirement, where more than one grant program requires compliance with certain federal laws. So the environmental review process is used to address the potential environmental impacts of a proposed project before funds are committed or the work begins. It's a process that's undertaken before you enter into a project to make sure that there's going to be no really negative environmental impacts to moving forward with that project. Other good news for this slide is the state grantee, the Department of Commerce, is going to undertake the environmental review process for you. So you don't have to actually do the whole environmental review process yourself. Many of you might have started some environmental review processes for other projects that are FEMA supported, however. What we want to make sure you're very aware of is to not undertake any what we call choice limiting actions. You don't want to do anything on the front side before you get this funding that might limit your eligibility for the DR funds down the road. So don't move any dirt yet. Don't acquire any property. Don't hire engineers to design a project. Don't undertake a project before you've been approved for it and before the environmental review has been conducted, because that might make you ineligible for certain funding if you've basically undertaken the project before the environmental review was conducted. Now, some of you have projects that are already underway. Like, wait, we have, we've broken ground on this project. It's funded with FEMA dollars. We have an unmet need we'd like to add to this project. We hope that the DR funds would qualify to come in and meet that unmet need. What do we do now? Well, the grantee is going to determine if any previous environmental review is going to satisfy the HUD environmental review process. So your previous environmental reviews could be beneficial and be useful for your future projects, but that's going to be up to the grantee to determine, and they're going to come in and do the environmental review analysis for you. So don't begin the project before your environmental review is complete. Otherwise, that might be considered what we call a choice limiting action. Those are some very specific HUD, CDBG-DR requirements, compliance requirements, the national objectives, the tie back to the disaster, duplication of benefits, environmental reviews. I want to dive into some of the more general post-award management requirements. Some of these apply to all of your federal grants. Some of them are going to be directly related to the uniform guidance, which many of you are familiar with. But I want you to have the big picture of what goes into managing a federal grant award, managing this award specifically, and get you thinking about how are we actually going to manage the awards. We're going to learn about a lot of rules here and requirements, and you're going to think, Rebecca, you just told me a lot. but I have to remember and do. And I don't know exactly how to put the processes and systems in place to make sure we comply with all these things. This is a good time to get started about, once we get this funding, if we're going to apply for it, how are we going to make sure we comply with the rules that are mentioned in this presentation? So we're going to call this the rules of the road. And I know a lot of you are sitting around in rooms together at different various COGs who have been gracious enough to host this training. So I want you to repeat after me. If you're in a room, if you're online, you can just talk out loud to yourself. We're all going to say this one sentence together. Ready? Grants are not free money. Repeat after me. Grants are not free money. I'm imagining that you all yelled that out in your COGs and are really excited about the fact that you now know there are going to be some rules attached to spending those federal grant funds. Not free money. We need to make sure we comply with the governing laws around these grant funds. Even though it's not fun to comply with them, there are a lot of tricky laws. I understand, I've read them. The federal regulations are not the easiest read. I don't suggest them for bedtime reading, but we got to comply with them nonetheless. So let's talk about some of the laws that apply. First one I want to point out is a big one, and it's for North Carolina specifically. We have a statute. It's 160A 17.1, and it gives state law authority to local governments to accept grants. It's our statute that says, hey, if you're offered a grant, you have some authority here to accept the grant. Now, there's a couple of things I want to point out about the statute. It says the governing body is hereby authorized to make contracts for and accept grants and aid. That means the governing board has to be the entity that actually accepts all of your grants. So they need to actually accept the grant. The manager cannot accept your CDBG-DR grant. And these grants can be used for any projects for constructing, expanding, maintaining, and operating any project, facility, or performing any function which such city or county may be authorized by general law or local act to provide or perform. I'm going to give you a second to sort of read that to yourself. The words I've underlined, why have I underlined those? It's to point out the fact that when you accept a grant, not just this grant, you're only allowed to use grant funds for lawful purpose for which you already have authority to undertake by state law. So getting a grant doesn't expand your legal authority. You can only undertake projects and programs and spend the money on things you have state law authority to do otherwise. There could be a local act by the legislator that might expand your authority related to a specific grant on a one-time basis. But generally, you have to act within the confines of state law, even if a federal grant gives you more broad discretion in how the funds can be spent. That means you have to be aware of your community development housing laws. How are we going to work with community development housing organizations? We have to follow those laws. What about giving money to nonprofits? You might get some of these DR monies as a subrecipient of the funds from the state, and then you might subaward those funds to a second-tier subrecipient nonprofit to help carry out some of the programs and processes that you don't have the capacity to do yourselves. You have to think about the laws for awarding money to nonprofits. We can't just give grants to nonprofits and say, we like your work, go for it. So you need to be aware of the state laws. You have to be aware of the state laws for working with private organizations and developers and entering into private-public partnership agreements. As I mentioned earlier, several of these projects are related to housing, multifamily housing. Very high likelihood that you're going to partner with a developer. You need to make sure you're doing that, all of that within compliance of state law. I'm going to point out a few state law resources. This is courtesy of my colleague Tyler Mulligan, who works in community and economic development primarily, and he said to share some of the upcoming trainings that the School of Government offers on public-private partnerships. So if you need additional training on state law requirements for entering public-private partnerships, we have a couple of trainings coming up. There are also some resources like the School of Government resource for economic development and revitalization that lists blog posts and strategies and a variety of resources related to housing laws. And I think we might be able to send that out to the attendees after this meeting. So you have this PDF file and are able to read through some of these great resources to make sure you're in compliance with state law, because even though it's a federal award, state law still applies. Other laws apply too, of course. So I talked earlier about that universal notice, those specific disaster allocation laws related to this tranche of funding. So that's what we call the universal notice and the supporting memoranda. Also, 24 CFR 570 applies. Those are the part of the federal regulations that HUD has written specific to the CDBG program. They also apply to the DR program as well. So generally the same program requirements for CDBG apply to CDBG-DR, unless there's an exception or an alteration in the requirements, and those are usually outlined in the universal notice. There are program-specific policies and procedures. The grantee is going to write those. They're in the process of writing the policies and procedures for each of those funded programs. Those policies and procedures are going to be very detailed and walk you through each of the programs. There are what we call cross-cutting federal regulations. Those cross-cutting federal regulations are considered environmental reviews, compliance with the URA, Section 3. I'm going to go into that in a couple of slides. Just be aware that's one area of law. Some other federal laws come in and are toppled on top of general CDBG laws. We have the uniform guidance, which is the uniform administrative requirements for administering federal awards. And then, of course, we have state law. And it's not just the state law statute that I referenced in the last slide. All of state law applies. For example, you might have to comply with some of our state law procurement requirements. And where there's a conflict in these laws, the general rule of thumb is to comply with the most restrictive requirement. My colleague Krista Kukuro in later sessions is going to give you some examples of what that might look like when it comes to procurement specifically. So here's your kind of bunch of laws, general categories of what you have to comply with when you're spending the CDBG-DR funds. And it's a lot. Let's look at each one of those in a little bit more detail. So I mentioned that here, 24 CFR 570 applies. What does that mean? That means if you went to the Federal Code of Regulations, which is just, think of it like a big old book of regulations that the federal government writes, and each agency has some laws that's added to the Code of Federal Regulations, and HUD has some chapters that it's responsible for, and HUD oversees the community development block grants. And Title 24, Part 570 has the rules for those block grants. Some of the ones that are going to apply to this award I've outlined on the slide, but for example, it includes your criteria for your national objectives. What does it mean to meet those national objectives we talked about earlier? What's the applicability of the uniform guidance? 24 CFR 570-202 talks about some alterations, deviations from the uniform guidance, and what parts of the uniform guidance do apply to the CDBG monies. Talks about making agreements with subrecipients, what has to be in that subaward, how to treat program income, how to treat real property, types of records to be maintained. Now, these rules and requirements apply unless your sub-award agreement says otherwise, or unless the award terms deviate from the community development block grant laws. These are sort of your standard CDBG-D requirements from HUD. HUD has a lot of supplemental information on their websites telling you how to implement some of these requirements. They're one of the best federal agencies that goes into depth with trainings and model documents. So if you are needing more information, I do recommend going to HUD's websites and sort of start perusing all of their materials that they have available. Then we have the uniform guidance. Uniform guidance, probably many of you are more familiar with than you were about 10 years ago because of the ARPA award, right? We got the ARPA award. We're still in the middle of administrating the ARPA award, the American Rescue Plan Act monies. The uniform guidance applied to expenditures of those funds, and the uniform guidance applies to expenditures of your CDBG-DR funds as well. The uniform guidance is set forth, laid out in subparts. There are some pre-award requirements. What do you do when you're applying for an award? There's subpart D, your post-award requirements. What do you do after you have the award? What are their compliance requirements to administer the grant award? Then you have subpart E, which is the cost principles. How are we going to charge costs? What's considered an allowable cost? And it includes your audit requirements, and there are some appendices. We're going to focus today mostly on subpart D and E, your post-award requirements and your cost principles. So subpart D, if you think about the slide as being clickable, and I went in to start reading what's in subpart D, it would come up with various post-award compliance requirements. And these include financial management, responsibilities, how do I financially manage the award, what do I have to do to comply, internal controls, program income, property management, procurement requirements, subrecipient management and monitoring, and some other things. So it's a list of your post-award compliance requirements and the rules tied to that. Now, as I mentioned, we also have to comply with the HUD rules for CDBG. One of those regulations, 24 CFR 570-202, talks about the applicability of the uniform guidance. And in this regulation, the HUD regulation, it provides some alternatives to the CDB, to the uniform guidance requirements. So HUD says, hey, we define program income a little bit differently. We define property management, and what you do with real property, the disposition of real property money is different than the uniform guidance. So you have to be aware of your HUD regulations and your uniform guidance regulations, because at times they conflict or they deviate, or they include some extra qualifying requirements. So uniform guidance is your standard basic set of compliance requirements. Those rules apply unless HUD has deviated, and that will be outlined in your award terms and conditions in your subrecipient agreement. So you don't have to start reading all these regulations and outlining where the differences are. But I want to point out, you can't just go to the uniform guidance and say, well, those are the uniform rules, I'm just going to comply with those, because there are specific federal regulations for this CDBG program that deviate from the typical uniform guidance compliance requirements. As I mentioned, there are some cross-cutting federal requirements. I think the knife on the image there works well because they cut into multiple grant programs, not just the CDBG program, but several federal grant programs incorporate these cross-cutting federal requirements into their program rules and regulations. So these cross-cutting requirements include the environmental regulations. You need to comply with NEPA, and that just goes back to having those environmental reviews. So as I mentioned, HUD's going to be responsible, the grantee, the state is going to be responsible for conducting the environmental review. They're going to make sure we're complying with the cross-cutting environmental regulation piece. There's also a requirement to comply with multiple civil rights and fair housing laws. That includes the Fair Housing Act, Title VI of the Civil Rights Act, that prohibits discrimination in housing actions. There's Section 3 of the Housing and Urban Development Act. That's something that Krista is going to go into in more detail this afternoon. Section 540 of the Rehabilitation Act and the ADA. Basically, you have to make properties accessible to those who are disabled. There are certain labor standards that have to be complied with. The Davis-Bacon Act, again, that will be addressed this afternoon, and the Contract Work Hours and Safety Standards Act. So we have labor standards that are going to apply as a cross-cutting requirement, how we're going to pay our contract workers and who we can hire for the work, or who we need to try to hire. And then there's also some cross-cutting requirements around acquisition and relocation. That's the Uniform Relocation Assistance and Real Property Policies Act, known as the URA. So these are your primary cross-cutting requirements. The grantee is working to create policies and procedures that are going to discuss compliance with these cross-cutting requirements. We'll likely have to adopt policy and procedures that specify how you're going to comply with these cross-cutting requirements. But we're going to hopefully have model policies created by the grantee that sort of set forth a template or standard for how to comply with these requirements that you can modify to your unit of government and then adopt, so you have the specific policies in place that are required to then show that you're complying with these cross-cutting requirements. So it's a little side note, mental note, you're going to have policies and procedures to outline your compliance with these cross-cutting requirements, but there's going to be more to come on that, and likely model policies and procedures coming from the grantee once you get the money. So we've talked a lot about the grantee. Grantee is our State Department of Commerce. So HUD, federal government, has given this tranche of monies to our state grantee to administer on behalf of the state. The state grantee is going to then subaward these monies to you, the local governments, to undertake some of these projects and programs. And to others, they will also award some of these funds to nonprofits and other organizations as well. There are many types of eligible applicants. Again, they're going to adopt policies and procedures for each program. That includes the workforce housing program, the multifamily rental housing program, infrastructure program, commercial district revitalization program. And in these policies and procedures, they're going to take you through what's required from the application stage, what kind of documents you need and supporting information to apply for funding for one of these project categories, what are going to be the compliance requirements for these categories, what's going to be the reporting, timelines, record retention requirements. Everything's going to be laid out in the policies and procedures. They're going to be important documents. If you decide to apply for funding and are awarded funding, you will then execute a sub-award agreement with the state to carry out that specific project that you have applied for. So you're not going to get funds for an infrastructure project if you only applied for a workforce housing project. You have to consider which programs to apply for and apply for all of them if you want funding from each one of them, or just pick and choose the ones that you need funding for to meet some of your unmet disaster recovery needs. The grantee is also going to monitor you as a subrecipient if you receive this funding to make sure you're complying with all these federal laws and regulations and program requirements that are attached to the award. So they're going to award the money, execute a sub-award agreement, and then monitor you. You will also have to monitor your sub-recipients should you then sub-award portions of this money to other entities to carry out the program, policies, and procedures and projects yourselves. So there's always going to be some level of monitoring and oversight. Importantly, the state has a real interest in making sure that you're following all the laws that we're talking about today, because ultimately they are responsible to the federal government, to HUD, to make sure that they're administering this program in compliance with all the laws and regulations. So as a subrecipient, most of the compliance requirements that the state has to comply with trickle down to you. And so the state's going to say, hey, make sure you're doing this. Do you have this documentation? Because ultimately they're on the hook for the end game and for compliance. So the state is your friend. They're going to help walk you through these program requirements. They're going to teach you about the types of documents that you're going to need as you move through and spending these grant award. And that's because ultimately they need to make sure that you are complying with the laws, because they're on the hook for your compliance as well. So you want to make sure to help the state as much as possible. There are specific criteria that are going to be set forth in your sub-award agreement. This is going to be your contract with the state grantee and you saying that you're going to spend the money in compliance with all the program requirements that are set forth in the sub-award agreement. The sub-award agreement is kind of like your guiding document for how to administer the specific program that you've been awarded funds for. So the agreement will include things like your project names, how much money you got for this project. Did you get 2 million? Did you get 5 million? You can't spend 5 million if you're only given 2 million, right? So you got to look to your agreement to see how much were you given. What's the scope of services? What am I allowed to do with this money? When can I spend this money? What's your period of performance? Do I have to meet a certain expenditure date? Do I have to obligate funds by a date and expend them by another date? You got to look for your period of performance. Don't spend funds outside of that period. How am I going to budget this project? What's expected for the budget? When can I get payment drawdowns reimbursed for some of these project expenditures? What are the CDBG regulations that are going to apply? What are the uniform guidance regulations that are going to apply? How about those cross-cutting federal regulations? Which ones am I responsible for this program? And are there model policies that you can adopt? It's going to include your reporting requirements. Do you report quarterly? Do you report semi-annually? That's all going to be spelled out. How do we close out? What's our record retention period? What happens if they need to suspend or terminate the award? And what happens with assets and if they need to be reverted back to the grantee? This is going to be your guiding document. It's kind of like your award terms and conditions. And by entering into this agreement, you are legally obligating yourself to comply with all the requirements set forth in the subaward agreement. It's not just, we'll do our best. It is a legal contractual obligation with the state to administer this grant award in accordance with the requirements set forth in the subaward agreement. So when you get the subaward agreement, make sure somebody reads it and it's very familiar with its terms and conditions. Maybe do staff training around what's included in the subaward agreement for all the finance staff and all the grant staff that's going to be helping to administer these projects. And again, it has to be the governing board who accepts the grant award by state law. So they should also be familiar and be the one to accept the subaward agreement and know all the terms and conditions that you're being obligated to comply with. So a lot there. Narrow it down to one key takeaway. Subaward agreement is important. Read it, as you are bound to the terms and conditions therein. I've talked a little bit about policies and procedures. There are a lot of policies that are going to come with any kind of federal grant. The uniform guidance has certain policies that are required. They have a payment management policy requirement, and that's just a policy that talks about how you're going to draw down funds to make sure that you're doing it in the most expedient process, getting them as quickly as you can when you're drawing down your funds. You need to have written allowable cost policy, how we're going to charge costs to the awards, under the allowable costs and the subpart E cost principles. You need to have a federal procurement policy, and you need to have a conflict of interest policy. Now, the School of Government, we have model policies for the 3 of the 4 of those policies. The one model policy we don't yet have is the payment management policy, but we wrote the other 3 policies around the ARPA award, and we'll probably tweak those to make them more general for the CDBG-D funding and other federal funding requirements. So you can look for some of our model policies on our NC Finance Connect website, and we're probably going to work with the state a little bit to help develop more model policies, but you don't have to start from zero. And since many of you have the ARPA awards, or all of you got the ARPA awards, you might already have these policies that have been adopted. Just go back and check to make sure that you still can find the policy and that they reflect your current practices and are updated. There are going to be other policies that you might want to adopt or the state might require you to adopt. You might have to have a property management policy that talks about what you do when you acquire real property and equipment. Maybe a general financial management policy, just outlining how you're going to spend the funds in compliance with the laws and who's supposed to do what. You're going to have a documentation and record retention policy is a really good idea. It will outline the types of records that you want to keep, where they're stored, what types of transactions require which types of documentation and record retention and the retention periods. You might need the policies for those cross-cutting federal laws. Again, the grantee might have model policies to work from. And you also need a fraud, waste, and abuse policy per the program requirements. And I think the state will probably come up with a model policy for that as well. So this is a big time for policies. Go back and look at the policies you do have. Get ready to know that you're going to need to adopt new policies as well related to this specific grant award if you don't already have some of these policies in place. So more to come on policies against your subaward agreement for your specific policy requirements. I can't tell you 100% every policy that you're going to need today, but you need to refer to that subaward agreement to see the policies and procedures that are going to be required. Yes, I did mention that the state, right now they're working on designing the criteria and requirements for each of the programs. So then you're eligible to apply once they get the programs completely designed. And as part of that, they're going to go through and think about adopting model policies, or they might have a Section 3 compliance policy that you can have and then adopt yourself, perhaps modify, or compliance with Title 6, non-discrimination. There could be model policies, and the policies that they don't come up with models for, we will do our best to create other model policies that you can work from. Yeah, we don't want you to spend too much time recreating the wheel when we have a lot of models out there, but then some of the policies are more specific to your functions, like financial management. You could consider, well, not required, documenting just your general financial processes in a policy related to grant administration. Keep in mind the audit requirements under North Carolina. All counties and cities, all units of government have to have an annual financial audit by state statute. That's your annual audit. Then we have a yellow book audit requirement, and that is if an entity expends over $100,000 or more in combined federal or state dollars, you've triggered the yellow book audit requirement. The yellow book audit goes into a little bit more detail about your internal controls. It'll review that, while your financial audit pretty much focuses on determining whether a local government's financial statements accurately reflect its financial position and operations. Are your accounting records done in accordance with GAAP? They look mostly just at the numbers and making sure your accounting processes are in place. Yellow book looks a little bit more into your processes as far as internal controls. Then there's the state single audit. If you expend $1 million or more in state funds, you have to have the state single audit threshold. That threshold was $500,000 for fiscal years ending on or before June 30th, 2025. So moving forward, the state single audit threshold has been increased from $500,000 to $1 million. And then a federal single audit might be required if you expend $1 million or more in federal dollars during the non-federal entity's fiscal year. This is based on federal dollars spent, not received. So you trigger the single audit requirement for federal audits after you expend $1 million or more in federal dollars during a single fiscal year. And I'm going to guess that most of you joining us today in those locations that have received some of these federal fundings for your disaster recovery efforts, you probably have all triggered that single audit requirement because you've received and expended more than $1 million. If you haven't expended more than $1 million yet, that will probably be coming down the line. When you trigger a federal single audit, the auditor will look to what we call the compliance supplement. And that is the playbook for the auditor. It's published annually, and it tells the auditor exactly what to check, what areas to focus on, if you will, during the federal single audit. And so there are 12 categories of compliance areas for grants management for every federal award. And they're listed here on the slide. And if you went to the compliance supplement, you would see that every federal grant program has associated with it this diagram with the 12 areas of compliance. And then 6 of those 12 areas will be picked for compliance checks. Doesn't mean you don't have to comply with all the requirements. It just means that the auditor conducting the federal single audit is going to focus on 6 of the compliance areas during the single audit. We're going to talk about some of these compliance areas today. But the first one is activities allowed or unallowed. Are we allowed to spend the money on a certain activity? And there's allowable costs, cash management, how are you managing your cash, eligibility, are you spending the funds for eligible projects and for eligible beneficiaries? They might look at your property management, any matching requirements, are you spending your funds in the period of performance you're supposed to be? Are you complying with procurement requirements, program income? Are you reporting out as required? Are you monitoring your subrecipients? And are you complying with any other special tests or provisions that are specific to that federal award? So federal auditors have come up with what they call pick 6. 6 of these are going to be really scrutinized during your audit. And you can figure that out in advance. You can go to the compliance supplement for any of your federal awards, not just this one, and see the areas of focus for your federal single audit. You might want to consider beefing up some of your compliance in those areas when you're going to be subject to the audit. Also, because you're going to be a subrecipient from the state has the ability to come in and look at all your documents. They're not limited to any of these compliance areas. They're going to make sure you're complying with all the rules and requirements that are outlined in your sub-award agreement. These are just the general high-level criteria for auditors to focus on during the single audit. One of the requirements under the uniform guidance that will apply to your CDBG-DR award is financial management. The subrecipients have to maintain a financial management system that meets the requirements found in the uniform guidance. These requirements include identifying all your federal awards received and expended. You have to know the awards you've gotten. You have to know how much you've expended of the awards. Making sure you have complete financial reporting. It's done in accordance with GAAP. Maintaining all the records that identify the sources and applications of funding. This statute also requires you to write and have a allowable cost policy in accordance with subpart E. We talked about your policies that are required. That's because the financial management statute says you have to have an allowable cost policy. You also have to have a cash management, cash drawdown policy. You need to be able to minimize the time elapsed between the transfer of funds. And then make sure you have effective internal controls over all the expenditures of grant funds and property and other assets acquired during the grant award. You have to maintain distinct accounting information that tracks your authorizations. Okay, we've said we're going to spend the money on this. We've authorized the expenditure. We've obligated the funds. You have to track your obligations. You have to be able to have your unobligated balances tracked. Know what assets you purchased with the funds, where we spent the money. Program income needs to be separately tracked as a separate line item if you're earning program income from any of these expenditures. We'll talk about that in a little bit more detail. And you have to track your interest. So these are called out as part of the statute. Hey, you have to make sure your accounting system tracks all of these things when you spend federal grant funds. Also, you need to make sure that you're maintaining all the source documentation. Any invoices, bids, contracts, bank statements, everything that evidences how you've spent the money has to be retained as well. This does not mean you need to start a whole new accounting system. You probably have processes in place that's already tracking how you're spending these funds. Just make sure you continue to do that for this grant award and for any other federal grant award. The compliance requirements are somewhat similar to what's required under state law in 159.26. It sets forth the capability requirements for your accounting system. So you should have a lot of this system already established. Just want to make sure you're aware that there is a financial management component to expending these funds as required by the uniform guidance. So you need to make sure you are established your accounting procedures. You have to make sure the funds are appropriated by the governing board into a budget ordinance. Don't exceed the award amount, right? You can only spend the amount of funds you were given during the time that you're given them. Separately track everything. Make sure we have a process for supporting the documentation. And I talked about you could adopt a financial management policy. A policy would talk about these things. What are we doing? How are we tracking our expenditures of the federal grant fund? Who's responsible for doing what? HUD likes to see specific people or roles assigned to functions in their policies and procedures. And that's not just for financial management, that's for all policies and procedures, to be able to see who's responsible for conducting a specific process. The pre-audit requirements of state law still apply, going back to the fact that state law governs the expenditures as well. So you have to pre-audit your obligations before you spend grant funds. Make sure you budget your grant funds into one of the 3 approved ordinances under state law for grants. You could budget these funds in an annual budget ordinance, but as we all know, the annual budget ordinance dies at the end of a fiscal year, so it may not be the most appropriate budgeting vehicle. You might want to consider budgeting in a grant project ordinance because that's a multi-year ordinance and it could be good for the life of the project. If you have a capital project, you can also consider budgeting the documents into a capital project ordinance. But regardless, The funds have to be budgeted before they can be spent under state law. You need to make sure you have a way to track the activities, the expenditures, how you're spending the money. So you want to come up with a system, maybe a document. I've created a sample document here that I can make available, but where you say, here's our activity. Here's what we call this project. Give it a specific name. Who's responsible for oversight? Here's how we know it ties back to the disaster. Here's our disaster tieback. Basically, you have to be able to document that the project is eligible and the beneficiaries are eligible. Grant program. When you're thinking through this, you think to yourself, eligible project. Is the project an eligible housing, infrastructure, or an economic revitalization project? Is it also eligible under state law? Where is the project? Is it in one of those HUD identified mid areas? Is it in an area that makes sense to be spending the CDBG-DR funds? How are we tying back to the disaster? It's our documentation. It says address a direct or indirect impact of the Helene disaster. That doesn't make sense to you, go back and watch the August training. How are we meeting our national objective requirements? Which national objectives is the project satisfying? Does it meet a low and moderate income national objective? Because 70% of our funds have to benefit low and moderate income persons. If not, does that project address an urgent need or eliminate slums and blight? So when you're thinking through your allowable activity analysis, that's sort of the process you can go through. All costs have to be eligible that are charged to the award. So you have to have eligible projects. You also have eligible costs. There are two types of costs. Direct costs are expenses that can be specifically identified with a particular project or activity with a high degree of accuracy. It's really clear that this cost is related to this award. Indirect costs are shared expenses that benefit multiple projects or organizational functions. So they can be sort of allocated to different awards or allocated to various, like maybe salaries. Part of someone's staff time is working on the grant. Some part of someone's staff time is not working on the grant, just doing their normal functions. So they're indirect costs to the award. They're not directly chargeable to the award. You might charge indirect costs in proportion to the award amount based on the time. There's a de minimis cost rate. I'm going to have the state will probably talk more about that in your subaward agreement, but the uniform guidance allows you to charge a 15% de minimis cost rate for your indirect costs. All costs have to be allowable. So we have to undergo what we kind of call an allowable cost review. So for a cost to be allowable to be charged to the award, it has to be necessary, reasonable, allocable, consistently treated, and adequately documented. So necessary means it has to be directly tied to the performance of the work. Right? It has to be necessary for this project. Otherwise, we'd be in a pickle if we couldn't actually purchase this item because it's necessary to move forward with the project. That's necessary. Reasonable, you're going to look at current market rates, right? Would a reasonable, prudent person actually pay what you're about to pay for the specific item? Krista will get into this a little bit more, but you have to conduct a cost or price analysis for procurements that are over $250,000. So you have to have specific documentation that you considered the cost or price analysis. You can do that for costs that are under that amount, but no matter what, you should have some documentation that you considered reasonableness. Allocable costs are either directly allocated or allocated in proportion to the charge of the award. So if you have administrative salaries or real property or that's purchased and used for one award and not another award, you'll allocate it proportionately. You have to treat all costs consistently. So cost items need to be consistent with your internal policies. You kind of account for things the same way that you would with other costs that are not related to a grant. You don't treat staff differently who are working on a grant award different than the other staff. You can't give grant staff 3 weeks of vacation and everyone else only gets 2. Everything has to be consistent with internal policies and procedures. And again, documentation of all the transactions and supporting documentation of reasonableness must be retained. The uniform guidance has what we call the selected items of cost, and that's just a list of 55 cost items, and it kind of gives you an idea of which costs are going to be allowable, how they could be treated. If you need a guide to say, I don't know if I can spend this, is this allowable under, for a federal award? You could go to your selected items costs, and it will give you a general idea of how the uniform guidance views charging that specific cost to an award. For example, one of the items of cost is alcohol. You can all guess that alcohol is not allowed to be charged to any federal awards. No parties with federal money, they basically saying. Some costs are allowable, but only with specific documentation. When you're charging compensation, your employees' compensation and fringe benefits to an award, you have to comply with the requirements under 200, 430, and 431 relating to charging time to an award for an employee's salary. So you're allowed to charge wages and salaries to a federal award, but you have to have specific documentation in place to show the hours worked, that these documents are part of the adopted in the payroll system. There has to be an approval process. A supervisor needs to say, yep, we verify this employee worked on this award this many hours. You need very clear time and effort records that reflect the percentage of work charged to a federal award and the duties performed under the federal award. There has to be reasonable and consistent organizational pay and benefit policies. You need to reconcile pay regularly, and the records all have to be officially incorporated into the organization's documents. You can't just have like side timesheets on the side saying, oh yeah, this person works, I signed off on it, and just put it into a file. It needs to go into the payroll system officially saying, here's what we charged to the federal award for this employee's time. So it's allowable with guidelines, guardrails. Pre-award costs may be allowed to be charged to the award, so maybe some costs that you incurred right after the disaster could be eligible. I'm going to let the state, as a grantee, say more about what types of pre-award costs may be incurred for particular projects. But just note that they're not completely unallowable, but you'd have to have make sure the environmental review and all other cross-cutting requirements were met before the underlying activity begins. If that is satisfied, then you might be allowed to charge pre-award costs to the award, but consult your sub-award agreement for that requirement. And you need some way to make sure you have documented that you've done the allowable cost review. So you want to establish a review process for charging cost items to your federal award. What's your expenditure? Was it necessary, reasonable, allocable, allowable? Where's my supporting documentation? Make sure someone in your local government is responsible for charging costs, and then someone else reconciles the costs that are charged. You don't want one person in charge of documenting the cost items and then reconciling their own work. Program income is another area of compliance that is often checked during the federal single audit. With this specific program, this disaster program, Commerce is not expecting much in the way of program income. Think that the main program where you could generate program income is the multifamily rental housing program. So if you work with the developer to develop multifamily housing, perhaps some of those rental fees earned would be considered program income. But in general, the CDBG-DR eligible projects and programs aren't going to generate a lot of program income. If you're going to generate program income, the grantee is going to address how to treat the program income in the sub-award agreement. So I can't get into exactly what you're supposed to do with the program income because they're still deciding that at the state level. I just want to note that the definition of program income is different than the definition under the uniform guidance. So for example, under the uniform guidance, if you sell real property, the proceeds of that sale is not considered program income. But under the community development, the CDBG program, the sale of real property, those proceeds is considered program income. So you need to be aware of some of those differences. The definitions are different for what is considered program income under Uniform Guidance and HUD, and more to come from the grantee. But if you do earn any program income, it is important to know that the program income has to be separately tracked and accounted for in your financial records. And that's true for all federal grant programs. You should have a line item in your accounting records documenting the program income that's earned. Oftentimes, the grant program will allow you to reallocate or add back that program income into the sort of pot of monies to spend it on other eligible expenditures. That has to be specifically allowed by the grant program. Otherwise, program income by default is used to reduce the total amount of your federal award under the Uniform Guidance. So pay real attention to program income for any of your federal awards that you own, and always separately track and account for it. Talk about property management. There are 3 types of properties that you can purchase using federal dollars. There's real property, equipment, and supply. So real property is land and buildings and anything attached to that land. Equipment is tangible personal property with a useful life of more than 1 year, and the cost to purchase it exceeds the lesser of the unit's capitalization level, so whatever your capitalization level is, or $10,000. Supplies is everything else. If it's not real property or equipment, you're in the supply category. Now, real property is something you might be purchasing with these funds. If you buy real property using the disaster recovery funds, you want to make sure to comply with the 24 CFR 570, 501, and 502, which talks about some of the use and disposition requirements around real property. So you have to use real property to meet one of the national objectives for 5 years after the expiration of your subaward agreement, or longer if your subaward agreement specifies a longer period. You're only allowed to change the original use of real property if the new use meets a national objective, or if you reimburse the program for its fair market value. So the federal government has an ownership interest in all property that's purchased or acquired in whole or in part with federal funds. So if you want to go sell it, you're going to need some kind of permission, and they might want their chunk of money back. It's going to be proportioned to the money that they put in. So if you buy property, make sure you keep those property records and know that behind the scenes, the federal government, if you go to sell it, might be entitled to reimbursement for its fair share. And then again, the proceeds from the sale might be subject to those program income requirements. I don't want to go into too many details because I want to make sure that the grantee has the opportunity to lay out these requirements for each specific program, but there are going to be governing rules and regulations about the use and sale of real property and what you need to do to track that. Equipment. Sort of the same thing. There are going to be guidelines in place for how you can use, sell, and track the equipment that you buy with the CDBG-DR funds. So the use of the equipment, you have to use it for a CDBG program. If you want to sell it, you might have to reimburse the recipient for its fair share. Look for the rules around disposition, because again, the sale of equipment is also considered program income under the CDBG program. There are a lot of specific management requirements around equipment that are outlined in Uniform Guidance. The Uniform Guidance management requirements apply to these funds. Basically, the UG says you have to maintain detailed equipment records and conduct a physical inventory of the equipment that you purchase with federal dollars at least every 2 years. So you have to have eyes on the property that you've purchased at least every 2 years. And you have to establish controls to prevent loss, damage, or theft. And there's a list of tracking requirements in the Uniform Guidance saying we have to make sure you have a description. You can document the source of fund, who holds title, the acquisition date, and the cost, the percentage of federal government share in the equipment, location, use, what exactly are you doing with this equipment, and then what happens after you dispose of it. So if you purchase any equipment, make sure you become familiar with the equipment tracking and use requirements in both the HUD rules and the uniform guidance because they both apply. Again, consult your sub-award agreement for the specific reporting requirements that might be attached to your award. We're almost there. We've got through a lot of compliance requirements here. If you decide to sub-award some of this money that you get, you need to be aware that there are specific requirements tied to making a sub-award with CDBG-DR monies. Right? So you're going to get the money from the state grantee. You'll be a sub-recipient. You might contract, sub-award some of these monies to a nonprofit or developer. You have to make sure you determine whether you have a sub-recipient relationship or a contractor relationship. Sometimes it can get a little bit wonky, and it's hard to decide whether we're in the sub-recipient lane or a contractor lane. Krista is going to dive into that a little bit more in this next session. You have to do a risk assessment of your sub-recipients because you need to make sure you're going to monitor your sub-recipients for compliance with the requirements, and the level of risk that you assess is going to affect the level of monitoring that you do of your sub-recipients. You need to make sure that you write a sub-award agreement outlining all the terms and conditions of the award. Again, everything that's flowed down to you from the state will flow down to your sub-recipient because they're going to step into your shoes to carry out the project or program if you decide to sub-award any of these monies. So they have to comply with all of the same compliance requirements that you have to comply with. And just like the state's on the hook for your compliance, you're on the hook for their compliance. So you need to make sure that you outline everything that's important and required in that sub-award agreement, that it flows down to your sub-recipients, and that you monitor for compliance with those requirements. Again, post-award monitoring is going to depend on the level of risk that you assess during your risk assessment. These rules are set forth in the uniform guidance, and the state might add to them. So make sure you look for additional requirements around any sub-awards of this money. There are going to be record-keeping requirements. If you haven't heard it before, I've said a lot. Make sure you have documentation for this. Make sure you have documentation for that. Make sure you can support this cost. Make sure you can support this activity. Make sure you can show that it's eligible. You need to document and retain those records according to the required time frame. Records have to be accurate, complete, and orderly. That's the universal record-keeping standard under CDBG. There are some specific record-keeping requirements outlined in 570-506. Like if you want to document compliance with the national objective or document compliance with a low and moderate income household, that statute tells you exactly how to document compliance with those requirements. It's a long statute, but it goes into detail about the specific types of documentation that you might need to meet certain criteria. The subrecipient agreement will establish your specific record keeping requirements. So look to that to know exactly what you need for record keeping. You're going to need to report out, and you're going to need the records to support the reports that you submit to the grantee as well. So very important, you need to adopt record retention policies and procedures. People should know the types of documents that need to be retained, how long to keep them. They should not just live on one person's file, personal Dropbox, where if they leave, no one knows where any of your documents are. Make sure you have a strong documentation and record retention policy in place. And a HUD has a handbook called Playing by the Rules, a handbook for subrecipients on administrative systems. And it talks a lot about record retention policies and procedures that might be worth a read. There are different categories of records that you're going to be keeping. There are three kind of categories we can zoom in on here. So you're going to have your administrative records. And that's going to be your application, your sub-award agreement once you're approved for the funds, the approved budget, all your communications with the grantee, any email sent, that should all be kept. Maybe your internal control policies, all your record keeping policies, and then some of the other general policies can go in this administrative bucket. There are going to be financial documents you keep. They're listed here on this slide. I'm not going to read them all to you, but you need to know you have to have a lot of financial documentation. And then there are going to be programmatic records, maybe your eligibility determinations. What's the project description? Who are our beneficiaries? Showing compliance with the national objective and other cross-cutting compliance requirements. and all of our real property transactions and supporting documents. So think about the categories of records, where they're stored, and who is responsible for making sure that these documents are created and retained. When the grantee comes to check on you, because again, they have oversight responsibility, they're going to be looking at these various areas of compliance. They're going to make sure that you're spending the funds on eligible activities and for eligible beneficiaries, and that you've met the national objectives. You have a financial management system in place. You're complying with all the rules and requirements set forth in that sub-award agreement, including anything additionally in that sub-award agreement that you haven't, duplicated benefits, and you're aware of cross-cutting federal requirements. They're going to look at everything that we've talked about today. So you have to be able to support compliance in all the various areas of compliance. So the OWL is asking us, because this OWL has been with us this whole program, how can we ensure compliance with all these rules? I don't know. Seems like a lot, right? We've gone through many, many areas of compliance today. The best bet here is to establish really strong internal control processes. You have to have, by law, internal controls over expenditures of federal grant funds. 2 CFR 200-303 is the statute, and the uniform guidance that says you must design internal controls that promote effective business operations, accurate record keeping and financial record keeping, and compliance with all the laws and regulations. And you have to take reasonable cybersecurity measures to safeguard this information. So it also says that internal control should be modeled after the standards of control in the federal government, which is the Green Book or the COSO framework. I teach a class on internal control at the School of Government. If you need to know more about how to design internal controls over federal grant awards or just in general, it's a good class to take. But in a nutshell, if you're in management, you're responsible for establishing the internal controls. Management is the finance officer, the grant administrator, the manager, anyone sort of an upper level of management responsibility. They're responsible for making sure the system of internal control is put into place. You want to do a risk assessment, see where the areas of risk are. Maybe we don't understand how to charge grant costs to our award. Maybe we don't understand how to budget for a grant award. Identify the risk relating to spending these grant funds. Then you're going to implement control activities to mitigate those risks and to make sure everything is going smoothly. You need to make sure management communicates expectations to staff. What are they responsible for as far as various policies and procedures and processes? They need to know what's expected. And then controls should be monitored. You can't have a control system if it's not monitored well. Some of the basic control activities that really will help beef up your internal control system is, again, solid policies and procedures. You have to have those written policies and procedures, and they need to say who's responsible for what compliance areas, not just be general. You need to be able to point to them and say, the deputy finance officer in this department is tracking the cost here. Strong authorization process. Not everyone should be able to say, let's spend the money on this project. That person needs to be trained to think through what's allowed. Segregate your duties. A lot of findings on audit reports for insufficient segregation of duties. You want to make sure you segregate the authorization responsibility, general record keeping, like the person who keys in and updates financial records, and your reconciliation functions. Person who updates financial records, does the record keeping, should not be the person who reconciles the accounting records. That's ripe for fraud. You need to make sure you have clear documentation requirements, that you actually are reconciling your records, and very importantly, that your staff is trained on all of these compliance requirements, specifically in the areas that they are responsible. So if you do all this, make sure you have segregated duties, assigned multiple people, have oversight responsibilities. Should be fairly good to go with your internal controls. So start thinking about project planning and start thinking about administrative planning. Which programs do we want to apply for? Do we have the capacity? Are we going to have the documentation in place? Where are we as far as specific projects? What categories of funding make the most sense for us to apply for? And then think about your administrative planning moving forward. Evaluate your capacity to apply for the grant and then to administer the grant in a way that complies with all of the rules and responsibilities that I covered today, which I know was a lot. Yeah, there are so many compliance requirements tied to federal grants, and it's really hard to make sure that you're complying with every single thing unless you think through the processes and procedures from the outset. I'm glad that you're all here today to take this training. I think it's going to help you understand what's going to be tied to spending these CDBG-DR funds.